What's up, everyone? This is Kenny here from Property Stories. So today I'm going to talk about calculating your borrowing cost. Basically, what's the cost of your money? Okay, so let's just start. All right. So this is how we're going to go through these types of calculation, products, and methods and examples, some FAQs, and also some conclusion. Okay. So we start with types of calculation. There's only two. Flat rate and reducing balance. Flat rate, the only difference is when the interest is calculated and how the interest is calculated. Flat rate, right, is at the start of the loan. So this added into the principal, okay? This is, for example, your hire purchase, car loans, and your personal loans. Very famous for this, okay? Reducing balance is when the interest is calculated on daily balance and takes into account the compounding effect. Credit cards, 18% per annum. If you late payment or bad paymaster, 18% per annum. Very bad. Okay? The one more thing that is very famous is housing loan. Everybody knows. And most of the banks these days is the reducing balance. Okay? Reducing balance. I don't think is what money rest is calculated on daily balance. Daily balance here means the interest is calculated daily. That means today, if you were to put, let's just say you owe 500,000 in the housing loan, you put extra 50,000, okay? So the interest is calculated based on 450,000 and not 500,000 for that day, for that one day, okay? Then the next day, if you still leave the 50,000 there, it will still be calculated based on 450,000 because you put in 50,000 a day, correct? That is what it means by daily rest and daily calculation. Monthly rest, as the name implies, they will calculate only once. Monthly rest, once. So if you want to save money, of course, you want daily rest because once they count that money rest means half anywhere you put in the money, they don't count, They will count the whole full month, doesn't matter if you put in extra money inside. This one, right, if for those who are taking Scheme Rumah Pertamaku, which is already now, I think it's already phased out, they replaced with a new scheme, 100% loan. Especially those affordable housing, they have this kind of special clause one. You have to take note. The special clause inside there, this is for 100% loan, they will impose all this. So there is a clause that says that it will be count monthly. So you better read your offer letter, or if you don't understand, get your banker to explain to you. Okay? Next up, what are the products? Like I mentioned just now, flat rate is personal loan, hire purchase. And reducing balance, property, credit card, ASB. ASB financing also reducing balance. Overdraft. Overdraft also is reducing balance. Is pay as you use. Okay? Reducing balance. This one is assuming, this part here is assuming the account can close. Overdraft is the only diff. The one that is the same with credit card is in the sense that it's a revolving credit. Revolving credit here means that you pay as you use. They charge you interest as you use. It will not close the account. Okay? Next one, methods and examples. Let's look at this first example. Mr. Lee took a loan of 100,000 at interest of 4% per annum for 10 years. What is the interest cost of loan using number one, flat rate, number two, reducing balance method? Okay, I'm just going to show you the difference. Everything is the same. What is the interest about like? So first you count total flat rate. This is how you count. Total loan amount times interest rate times 10 years. So total loan amount just now was 100,000. You times 4% times 10 years. Okay? So this is interest only. Total interest payable is already 40,000. 40,000 for the whole 10 years. Then you add that 40,000 to the principal. So money installment. How much the money installment? Okay? Plus the divide by the tenure. Tenure here is in months. Loan amount plus total interest divide by tenure in months. So 100,000 plus 40,000 divide by 120 months. 1166.67. 1167 a month. Okay? A month. So this one, right, you pay extra, you settle early, also no point. The interest already calculated. And banks are less likely to give you discount. The last time I remember, I think my mom settled the car payment, only give like 1 or 2 months discount. That's it. Okay? So reducing balance. Reducing balance, remember, is count by days. So we talk about July. Example here, July has 31 days, right? So total payable interest is total loan amount times interest rate times days range over the year. In days, So 100,000 times 4% times 31 days. Okay, 31 days. And 1 year is 365. Yes, I know there's leap year. We're going to face one next year, 2024. But this, for the purpose of calculation, is always 365. If that year is a leap year, then yes, it will change 366. You'll be wondering now, why the bank so petty one? Won't change. You know, the bank is not dealing with just 100,000 and billions. 1 day interest collection can mean a lot, you know. So yes, 1 day also they count. Okay, that's the bank for you. They will not count, they will not leave anything, no stones unturned. There's no such thing as, okay lah, never mind lah, this one we close one eye, no. Anything they can touch you, anything they can squeeze out from you, they will squeeze out from you. So remember this, always, the bank is your partner, not your friend, your partner. So 1 month you have to pay 339.73. That they will usually will just round it up to 340. Remember your installment, there's no rounding down one. It's always the cent, you round up. You always pay round up. You want to pay extra also, you round up. Okay? So it's interest only, no principal calculator here. Reducing balance, no principal. Because remember, the principal, right, as you pay, you reduce. So every month, the principal is actually different. Okay? So if this one, just use your any home loan calculator. I'm using this home loan calculator. It's by Egmore Studios. Okay? This one is a free calculator. Insert calculator and you get money installment. So if you really want to know your money installment, right, from that figure just now I gave you, you want to back calculate, I tell you, headache, you just plug the figures I gave you, straight away put in the home loan calculator, okay? Home loan calculator, you will get 1012.45. Again, when you pay, it's 1013. That's installment. Total interest paid, you can see, over the 10 years, total interest paid is this much, 21,000. 21,000. This is a reducing balance method. Again, this is reducing balance method. And you see the total interest payable, flat rate versus the reducing balance, how much difference is like half, half. For the same tenure, same amount, same interest rate is half. So the next time, right, when you are offered any product, this one can be used for investment also. Investment, or if your credit product, ask them how they calculate the interest rate. Is it daily or is it monthly? A lot of difference. So you must understand that when the bank's offering you, example, offering you the car in, let's just say a higher purchase 2% only. Not really, 2%. 2% is actually 4% if you go flat rate. Okay? 2%, they'll say, you will have to ask them, is this a flat rate or reducing balance? How you count? If it's flat rate, 2%, very expensive. So now you know these two methods, so what, right? So what? What's the applicable? How is it applicable to you in your real life managing your finances? The first one is to settle debt fast. Usually, what we do is that you apply this snowball method. You know this snowball method where they settle the interest with the facility with the highest interest first. For example, today you got a higher purchase, okay? You got a housing loan, and then you got a credit card. The credit card is the highest, right? Interest rate is 18% per annum. You settle that first because that's the highest interest, okay? Because housing loan reducing balance and the car just now is already flat rate, already calculated. It's the credit card, it's the one that you need to settle first, not your snowball. That's how they do it. Another way you can do it is also by the amount. Okay, I understand when it comes to housing loan, usually it's a big amount, but sometimes, right, you have like this one car loan, like $500, and then suddenly the credit card, you need to pay minimum payment is like 1,000. But this 500 you can settle already. You settle first, that 500 instead of paying that 1,000. That 1,000 you maybe pay half or pay minimum, but next month make sure you settle finish. Okay, next month make sure you settle finish. Try not to leave a balance for the bank to charge you. Okay. Then next one, got cash, settle housing loan or personal loan first. Okay, again, settle housing loan or personal loan first. Remember, housing loan is reducing balance or personal loan is already flat rate. Okay, they charge it flat rate. So if you got cash, you settle your housing loan or personal loan first. For me, right, I will settle the personal loan first because it's a smaller amount. Because it's flat rate and smaller amount. Once I settle, then I can get this out of my way. Usually housing loan will be bigger. But if both are the same, what will happen to me, right? If let's say both also left 50,000 an example, and I only got 50,000, I want to settle one. I personally, I will settle the house if I'm staying. I repeat, if I'm staying in the house. At least personal loan is okay. Never mind. I can settle later. But the house I'm staying, I still have my family here. I want to make sure my family has a roof above my head. And the bank, right? Easier to bankrupt or to go to AKPK if you have something that is no collateral. If you have something that is with collateral like the house, it's very hard. A lot of things you have to go back to the banks. But if you have something that's no collateral, it's easier for you to talk to the bank and also talk to AKPK if really need. Hence, I will choose to settle the house first if the house is by my own use and my family is staying there. Okay? But if the house is investment and the rent can still cover of course I'll settle the personal loan. Let the rent cover, right? Next one. Why not all products use the reducing balance method since it's so good, right? It helps you to save interest. Because it's not profitable to the bank. That's the whole idea. You saw how much the bank will earn, right? If every product use reducing balance, how to give you the dividends, correct? If you have owned bank stocks, right? Like myself, I used to own bank stocks for a long time. You will notice that every year the dividend is very stable one. It's a very good cash generating asset to hold bank stocks. Okay, but that is a story for another day. So where do they get the dividend to pay you? By charging their customers. Customers like you and me. Correct? But Bank Negara recently, I think a few years ago, if I'm not mistaken, they recently revamped the Hire Purchase Act. So the Hire Purchase Act, they already put there that you have to use reducing balance method. That means in the future, not in the future actually, there are already some banks already doing that the hire purchase is follow like housing loan. It's reducing balance so you can settle early. Okay, you don't have to pay so much interest. Not like now, most of the banks, right, are doing that upfront flat rate. So you buy a car. That's why people say you buy car, you pay more interest than you pay house. Actually, so rest assured, Bank Negara knows this, and they are doing something about it. But at the end of the day, I want you all to remember it's all about money So you got an option to actually own a property or own a bank stock. Both of it will generate income. That is up to you to choose. We shall go on further that on other videos where I share my thoughts, okay? So again, if you are looking for services, purchase, refinance, debt console, or you're looking for SME business loan, right? Fill in the form below. I've already put in the Google form down below, So I'll contact you as soon as possible. Finally, if you got any questions, you can email us in hikaihatana@gmail.com. I try to take as many as I can. And if the question is already answered, on the search, please use a search. I will not answer it again. If you really want something more personalized and deeper, you can opt for one-on-one consulting session with me. Okay? Yes, it's a paid consultancy. So that's all for today. This is Kenny here from Property Stories. I'll see you again next video. Bye-bye.